Hi, welcome again to all of the gold and silver investors, traders, stackers, accumulators out there, or potential investors in these markets. This is Christopher Aaron coming to you again. It's our midweek update on the price of gold and silver. Today is October 6th, 2015. And we're going to start off again with the gold market. Here's an image looking at one of the institutional vaults storing a lot of gold. These are LBMA gold bars, each one weighing roughly 400 troy ounces. And there's a few silver bars back there, each weighing roughly 1,000 troy ounces. Now, we had some news come out today that I want to mention briefly before we get to the charts. And the article was about China and the accumulation of gold by the Central Bank of China. It looks like they have added another 1% to their holdings in August, which represents almost 500,000 ounces. And so what this represents here is the holdings by China overtaking Russia as far as now being the fifth largest holding for any central bank. Now, these are really important fundamental factors impacting the price of gold when you have central banks that are no longer selling their gold as they were through most of the 80s and 90s and the early parts of the 2000s, but instead being net purchasers. That shows you that there's a backstop underneath the gold market right now. So that's very important for a long-term trend. And I want to speak a little bit about the way that I approach the gold market so you can understand the type of analysis that I do. I've had some people sort of mention that I focus a lot on the charts, and that is correct. And I don't want to come across, though, as if the fundamentals are not important, because they absolutely are. The fundamentals are what drives the market over the long run. And that is very true in the gold market. And for an individual investor, it's very important to know, to really understand on a deep level the fundamentals, because that will give you the conviction to stay in this market as these violent up and down swings start to accelerate. So I do pay attention very much. I spent a number of years studying the intricacies of the gold and the silver markets to arrive at this point. So that's always in the back of my head. That said, I tend to focus a lot on the action in the charts because what I've learned over the years is that all of the fundamentals appear on the charts. The charts showing the price action for the market. The price being the sum of every individual or institution that participates in that market. From every single purchase of silver to every single institutional purchase of large amounts of gold, that appears as a sum in the price. And so by studying the action of the price, we can see where the large buyers and where the large sellers are coming in. And as smaller retail or individual investors, let's say, or even mid-size, moderate individual investors, it's really important to align ourselves with the trend and to not get so caught up in thinking that the market is going to move the way we want it to, but instead paying attention to what the market says and aligning ourselves with it. So that's why I focus so much on the trend, especially in the intermediate term, because I like to make money in the short run, even as I hold my longer term convictions. So let's move right in here to the chart action like we do every week. And today we're looking again at the last 3 days of the price of gold. Another strong update today, taking us briefly above 1150 before backing off, but holding on to most of those gains for the day, clearing the price from yesterday nicely. So looking at this from the 1 year time frame, we are right here where this red arrow is. And we've mentioned this consolidation in the last few videos. This consolidation is still holding. So we've had this primarily defined by this blue intermediate term downtrend line here. And we have here a short-term uptrend line with this teal color. And so we can see this back and forth coming down to this line, up to the blue line, down to the teal line, up to the blue line, down to the teal line, and once again here up to the blue line. Today just piercing through it, just by about $5, which is the same thing that happened last week here. So from a technical analysis standpoint, we like to see this price rise above an important downtrend line and hold that for at least 3 days. And we like to see a certain percentage move away from the downtrend line in order to say that this consolidation is over. Now, why are we focusing so much on this consolidation? Because consolidations tend to result in significant moves one way or the other. And we have various ways of estimating how far this consolidation could go, could move once it breaks. But we're probably going to be looking at about a $100 move in the price of gold once there's a firm break here one way or another. So if this were to break to the upside from about the apex of the consolidation, we might be looking at a move to over 1200 in a fairly short amount of time. And if this were to move down, break this teal line on the downside, we might be looking at a move down to the low 1000 region, which happens to correspond with another target that we still have outstanding here from this head and shoulders pattern from earlier on in the year. So we're watching it develop. If you are looking at the market right now saying, oh my God, it went higher today, I need to buy before it runs away from me, we're telling you there may be some merit to holding off for a few more days. If it starts to move higher, we're going to know. And yes, then you miss a few dollars on the upside, but it's worth waiting for that opportunity to see if we get this down move here, which would take us about $100 lower over the next couple weeks. We let the markets tell us. We're not predicting that. We're showing you what the market is indicating. And that's what we like to do as individual investors. Why is that so important? Because when we back it out to the 7-year time frame, we can see that this short-term downtrend here in teal is part of this bottoming process. It's part of this more primary downtrend with these blue lines, which is a very, very gentle downtrend. This is moving just ever so slightly down. And typically what will tend to happen as the market is bottoming, it will transition from moving slightly down to moving sideways to moving slightly back up and then resuming the strong uptrend at some point in the future. So by paying attention to the bottoming process here, we're getting a good feel for when this might start to accelerate higher in the future. Moving over to the silver side, here you had the price action for the last 3 days. Today's price being shown here in green. And you can see, compared to that gold chart that we showed, the price of silver here, yes, it's higher, but it actually came back down more significantly than gold did, finishing today about 15 cents higher than yesterday. Backing off, it briefly broke above $16 an ounce before backing off. Now, what you're seeing playing out here in the silver market is the industrial demand playing into the market. Silver has actually a larger industrial demand than an investment demand. And so on days where you see the stock market faltering or consolidating, silver will oftentimes move with the stock market or with the industrial commodities that make up a significant part of the stock market. Whereas on days where the stock market might be going down and you see gold rising for its safe haven appeal, sometimes we can see silver rising less in percentage terms than gold. So that's exactly what we saw right here today. Now this works in the other way too, and I'm convinced that in the long term, silver will outperform gold. But in the short term, silver does experience these underperformance days when there is some choppiness in the industrial side of its demand. How does this play in with the 2-year chart? This is a really important chart. We have silver coming right up here to this blue downtrend line, which we have hit 1, 2, 3, 4 times. Now, in the last presentation, we were talking about this short-term downtrend line. And look, we have broken above that. So I've changed that short-term downtrend line to turquoise here. And that was an important step. That's an important part of the bottoming process. As downtrend lines are broken in the short term, we then challenge the more primary downtrend lines. And so this shows you right here, we are coming up again to this primary downtrend line. Very important point that the silver market is at right here. To look at the silver mining side, do we have any clues? Could there be strength coming to silver when we look at the action in the silver mining equities? Here we have silver wheaten, and we see this confirmation, silver wheaten breaking strongly above its short-term downtrend line, as represented by this pattern here, which we call 3 soldiers. And this is basically a pattern that's taken from Japanese candlestick analysis, which is a certain type of technical analysis, where you see 1, 2, 3 strong white candles here in a row. These white candles representing up days as opposed to the red candles. And these filled white candles, you can see that each one in a row did not even pierce into the previous day's price action. So what this really represents is a market that is accelerating now to the upside with strong volume as well. Of course, silver wheaten had underperformed the price of silver on the way down here over the last several months. So this breakout, we're looking at a trend change. We're not saying that this is now going to be off to the races over the next several months, but we're saying, look, this is a very important trend change. As opposed to falling sharply, this has now broken that downfall, and we're going to probably see more consolidation before the next uptrend arrives. And to bring that back to the price of silver, that next uptrend is probably going to correspond with silver breaking its primary downtrend line right here, which comes in at $16 per ounce for the spot price. How does this play in with the more long-term trend? The reason why we're focusing on this last 2 years so much is because this 2-year downtrend shown here in blue represents the bottoming action for this long-term 4-year downtrend that we've been in. You can see the steepness here coming from these turquoise downtrend lines that was broken, and the steepness now lessening. And when this breaks above this royal blue downtrend line, we're going to have a strong indication that the bottom is in. And from there, it's not that we immediately go back to $50 an ounce, but you start to see some back and forth action. And then you start to see some gains coming in over the next 6 to 12 to 18 months. And that will be a very exciting time for people who had been buying silver all in this range to finally start making some profits as opposed to sitting on losses here. The silver market probably has flushed out most of the people at this point that did not understand the fundamentals and that bought here around the highs. And as now we're getting back down to this long-term uptrend line, this would be a very logical place to see this trend reversal start to happen. So we're watching for that. It's not quite there yet, but it certainly is moving in that direction. And so our predictions and our summary for this presentation, these strong up days that we're seeing are definitely a sign of things to come. You have the gold and the silver markets that are now testing these important downtrend lines that we showed on those charts. Again, the charts representing the sum of every buyer and every seller in those markets right here and right now. And that's why those downtrend lines are important. Because when the buyers begin to overwhelm the sellers, you will see that trend change. So what we're looking for when we see that breakout above the downtrend lines, that's going to be a high probability that the bottom is in for this bear market. However, if we see a failure or a false breakout from those downtrend lines, what we're saying is there still is that probability for another down leg, which would probably take us to somewhere in the low 1,000 region for gold, and probably take us to around $12 or $13 at this point for silver. Not a whole lot more as far as the whole bear market goes, but we're just mentioning that probability in case there's anyone who is looking to make another purchase. You may want to see if we get that final low. That would represent an excellent time to pick up a little bit more cheap precious metal here. That's about it for today, guys. Thanks for joining me again. I hope this has helped to shed some light on the way that I analyze these markets for myself as an investor and a trader. And please subscribe and share to, subscribe to this channel if it's been helpful to you. Feel free to share it with anyone who might find this useful. We are just really trying to illuminate these markets to help kind of debunk some of the analysts out there who are too extreme in one direction or another, who might say silver's going to $100 an ounce next year, or on the flip side, gold is going to fall back to $300 an ounce next year. We're presenting these videos to really try to show people what is appearing in the actual markets from a disciplined, logical, chart-based standpoint, as opposed to getting all hysterical when we read the headlines or see a strong move in one way or another. Let's see what the market is actually telling us and prepare for the action that the market is showing us. So thanks again for joining me. One more time, there's some free research on the website that I cannot put into video format. It just doesn't work. And that's for people who may be interested in adding some exposure to the more highly leveraged mining equities in the precious metal space. I'm not recommending that for everyone, but for people who are interested in that, that is available for free on the website. Thanks for joining me again, and we will try to have another update for you this weekend, probably on Saturday. Have a nice rest of the week.